We are live with another Quick Tip Tuesday, each and every Tuesday at 8 p.m. Eastern Time. Today's topic, due to a recent transaction, I want to discuss what is a warrantable versus a non-warrantable loan. Condo, non-warrantable condo. So that's huge, very huge if you're looking to buy a condo. A lot of people steer to a condo when, depending on the area, if the single family house may be too high. Another reason people steer to condos, if they don't want to deal with maintenance, they still want that apartment building feel, kind of. They want the amenities. There's a lot of condos with gym access, tennis, basketball, pools. So there's a lot of different reasons people steer towards the condo. But this is very important. If you're going to buy a condo, make sure you know if it's warrantable or not. The difference is a warrantable loan is a condo that you are able to get a conventional loan on it. So you're able to go little as 3% down, 3 to 5% down, depending on the area, your income, and the criterias. So that's backed by the government. It's a Freddie or Fannie Mac loan, which is backed by the government. And when it comes to non-warrantable loans, those are not backed by the government. So that means you would have to go out and get a non-traditional finance loan on it. So typically those can be higher down payment, higher interest rates. So those are considered more riskier loans. So the government doesn't back those loans up. So keep that in mind. A few things to know for warrantable loans. They're kind of similar to single family homes because you're able to get a conventional loan on it, and they're easier to buy and sell because your pool is bigger. A conventional buyer, lower down payment, lower interest rate. So typically you have a bigger pool. So keep that in mind. Let's see a few other things. Once you step in to a condo, you won't really know if it's warrantable or non-warrantable. It's a lot of back-end information. So the best bet is to touch base with the listing agent, your realtor, whoever's helping you buy your condo. Ask them to see if it's warrantable. If it is, that's a good step. But also do your own research, or try to do your best research as you can, because you don't want to go through a transaction in the middle of it, or wasted a month, or pay for the inspection, pay for the appraisal, pay for everything. Come to find out, you aren't able to get a conventional loan, and it's a non-warrantable loan. You can either have to let the deal go, or pay a higher down payment and get a higher interest rate on the loan itself. Let's see what else regarding non-warrantable. So a few ways to know if there's basically a list of criteria that the government the Fannie and Freddie will advise to see if it's a warrantable loan. Usually you have to do what is called a condo questionnaire. If some of those questions are off, doesn't fit the guidelines, it will be deemed as non-warrantable. So a few things are all the tenants, or all the people that owning in the unit, are they paying their dues? So if, I believe, 10% or higher are not paying their dues, that means the condo entire building itself is non-warrantable because they don't have enough income to sustain the property. What is the difference between a condo and a co-op? So a condo, you actually own the actual unit. For a co-op, you're a shareholder. You basically don't really own the unit per se. You basically kind of renting the space. It's similar It's not the same. And also, a co-op is a non-warrantable, so you aren't able to get a conventional loan on it. Let's see. I have a few other questions. Should I get a non-warrantable condo? That is totally up to your discretion. If it meets all your criterias, such as like location, price, your monthly payment, you have the down payment for the condo itself. But just keep in mind, you may have a tough time selling the property. As long as it meets everything else and you're fine with that and you're willing to go through those hurdles if needed to sell the property later down the road, you may have issues. Just keep that in mind. Just know everything and think of the future. Don't only think of right now. Think about at the end of the day, if you want to sell it, what type of issues you may encounter. What is the credit score needed for a condo? So a condo, you will need a conventional loan on it for most condos. So it will follow conventional guidelines. So 640, 660, the higher the better, of course. If you're putting less than 20% down, you would have mortgage insurance. But the better the credit score, the lower the mortgage insurance you can get on the condo. If you're going non-warrantable route, which is a non-traditional finance, depending on the bank, the lender, whoever's providing that money, you may have different criteria. You may have to have a higher credit score, so keep that in mind. Can I find online what condo is warrantable? So the funny thing about that is you really can't. There isn't a list of warrantable and non-warrantable condos because they can change over time. So for instance, if the building itself was all the people within the unit was paying their dues and they're up to date on their dues, then it's warrantable. So let's say a month from now, people stop paying their dues, a certain percentage, then if someone else tries to get a loan on it, they won't be able to because now it's deemed non-warrantable. So it can fluctuate from in and out of what condos can be warrantable and what can make them non-warrantable. So there isn't an actual list. Can I buy a condo with an FHA loan? So there is a list. Yes, you can, but you have a very, very small population of which, very small inventory of which condos you can buy with an FHA. So there is a list for which condos are FHA approved. So that's a very small list. So I would say, I don't have exact percentage. I would say probably less than 5, but I don't know if it's on the low end, maybe 1%, 2%. There is a list. You can actually go online to see if a condo is FHA approved. I wouldn't run around looking for a condo with an FHA because you have a very subset population. But if you do find a condo that's FHA approved and it meets all your criteria, that's a win-win situation for you because you can put as little as 3.5% down to buy a condo. And you can, that's definitely a good buy. Before I take any more questions, let me make sure I touch all of my topics that I wanted to touch. Government-backed loan. Yeah, so a non-warrantable loan is basically the government's deeming one or more reasons that the actual property is risky. As I mentioned, one reason was if the units within the building are not paying their dues, that can make it a riskier loan. Another reason can be if it's in a flood zone and it doesn't have flood insurance, that can make it deem it non-warrantable. A few other things, if it has high debt, if they don't have a proper budget for reserves, if they don't set aside a certain percentage annual basis for reserves, that could deem it non-warrantable. So the condo questionnaire can definitely dive deep into the finances of the condo association itself. Another good reason, if it's a condo and it doesn't have an association, that can deem it as a non-warrantable condo as well. So there's a lot of nuances when it comes to condos. So just make sure you're working with that proper team to make sure you get to the closing table, because you don't want to go through a transaction and come to find out you pay for a lot of different things in the transaction, and then you can't actually get the condo at the end because it's a non-warrantable. I'll probably take one more question, but thank you for all the questions today. Might wrap it up. Just to recap, just make sure. Oh, another good reason, if the condo association is under a lawsuit, that will deem it non-warrantable as well. So there's a lot of nuances, as you can tell. Just make sure you're working with the right team, and if you definitely want a condo, ask those questions up front. Have your knowledge up front, because that would save you headaches, can save you time, and yeah. All right, everyone. Thank you for joining, and have a great rest of your Tuesday. And shoot me a message if you want me to discuss any other topics on next week's Quick Tip Tuesday.